The stats show this is a dramatic shift when it shows that 54% of first-time home buyers bought with someone other than their spouse or their partner, friends, family, or even other investors.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadden, and I'm your host. I can't wait to get you into the flow.
All right, here's a stat that should make you sit right up in your chair. In Canada, in the 2025 CMHC homebuyer study, over 65% of first-time homebuyers went to their absolute maximum ability to qualify when purchasing their first home. That's a couple of percentage points higher than last year and the year before that. And it's pretty notable because the truth is, getting into the Canadian real estate market is still a feast or famine. And what's more than that, what's crazy to hear is that not only was that the highest in the last 5 years, but over 50% of first-time homebuyers are not doing it alone or with a spouse or a sibling. Over 54% of first-time homebuyers surveyed bought their first home with someone else who is not related to them and not their spouse. This says that the Canadian housing market is not just competitive, it's survival of the fittest. And today I'm going to dive deep into the consumer survey. It's not just first-time home buyers, but it speaks to where the Canadian real estate market is right now, what's driving the numbers themselves. I'll break down exactly what these smartest buyers are doing in this market to not only survive, but do well and, shall I say, thrive. By the end of this episode, you will know exactly what the survey is saying, what Canadians are doing right now, and my key points about how to overcome any of the problems that they're hearing from Canadians in this particular market. Now, let's get right into the key data. Right off the bat, 65% of first-time home buyers paid the absolute max that they could afford getting into the marketplace. And again, as I mentioned, this is the highest in the last 5 years. As I mentioned before, 58% of all buyers push themselves to the limit. That means that over half of Canadians are borrowing the max amount that they can qualify for. Now, I should start by referencing this is based on the stress test, and this is the surveyed numbers, so it does not have any quantifiable data other than the survey. But assuming they are accurate and they are telling the truth, it looks like most people, more than half people, the people that are out there, are borrowing to their maximum. As we mentioned before, first-time homebuyers more so. Now, that's not super surprising given the marketplace and where it's at from a housing perspective in Canada, but it's interesting to note that it's not just a random stat, and it's a clear sign that there is an affordability crisis in our country. And based on some data that I read through and watched from Doug Porter of BMO, a BMO economist, it looks like this is a serious issue that does not have any serious or near-term resolution is probably the best way to put this. And the truth is, it's not just paying for a house. It's the thing is, when we talk about their maximum, we're putting people to their maximum limit, which means they have no margin for error. And anything goes wrong, like a job loss or a repair or a car loan or anything of that nature, they could be unable to make a mortgage payment and be out of a house if they didn't really prepare themselves. Now, to me, this shows the old idea of live below your means is pretty much dead for first-time home buyers. Tell me I'm wrong. It's not even about luxury anymore. It is about survival of the fittest in a market that is really stacked against first-time home buyers. Now, that doesn't mean it's impossible. Of course, I see it every single day and we help people do it. I just mean it's not as simple as it once was. And here's the kicker. Just because everyone's stretching doesn't mean you don't have to or you can't. But what it does mean is you don't want to do it recklessly. My recommendations are really just hacks and things that you can do. Now, if you are going to spend to your maximum, try this. Don't only just budget. I mean, everybody should and can have a clear budget and understand where their money goes. If you don't do that, I highly recommend getting on that right now. But what I do recommend instead is actually start living your life as if you were owning. So like figure out what your mortgage payment would be, figure out what the strata fees would be, what the taxes would look like, and ask yourself, can you survive day to day? Do this for some period of time, invest that extra money, maybe put it towards the emergency savings that you might have, and just make sure that you could still qualify based on your lifestyle to be able to make these payments. What happens if at the end of your term, or if you take a variable rate and payments rates were to go up 1% and you were to go from a 3,000 payment to a $3,300 payment? Could you afford that? What if you lose a tenant for a month or 2 months? If you are surviving based on your tenant's rent, would you be able to make those payments? I've heard from people time and time again, the answer is no, which means that you've got to do some more due diligence up front to make sure you have just enough cash set aside to be able to get into the housing market itself. Now, this is the second piece of data that stood out to me was around the co-ownership boom. Now, this one to me specifically is not surprising. I've been helping families and partners and investors and other people co-buy successfully with very key strategies for the better part of the last 4 years. The stats show this is a dramatic shift when it shows that 54% of first-time home buyers bought with someone other than their spouse or their partner, like friends, family, or even other investors. This is pretty key because it shows a massive cultural and financial shift. I mean, co ownership no longer is just an option, it's literally becoming a necessary strategy for a lot of people to have a chance to own a property. I mean, this might sound crazy, but I've helped people get mortgages before where they admitted that when they were looking at a partner, the ability to help them financially and qualify was a big part of that decision, which I'm not going to say is a good or a bad thing, but it's a truth of reality in Canada today. And as a side note, I'm not sure if you've heard the term hobosexual. I only recently found out about this actually, but it's the idea of people living with other people based on the fact that they own a home or can own a home. Anyways, all that aside, this brings up the complexity of co-owning a property with someone else, and it's legal and it's financial. And if you don't have a clear agreement, it's a complete freaking disaster. Honestly, I think co-ownership is one of the best ways to fight against the insane housing prices for most people and getting into the marketplace. But I also think it's a move that requires serious planning. And it's like, here's the thing, it's not just splitting rent with your roommate where you can find a new roommate. Like, this is something that you are in it for good. So if you are in the position where you're thinking about going down that road, there's a few key things that you can do. Number one is to get legal protection, which could include the percentage of ownership, what your down payment looks like if someone was to buy someone out, if you had to do a repair, and exit strategies and plans, and so much more. Now, as a side note, if you are interested in co-ownership, I built out a complete guide that you could take to your lawyer. So if you reach out to me and would like to know more, I can send that over to you. Now, this next stat was so interesting to me. 71% of home buyers believe their home value will rise in the next year, but 47% worry that they're overpaying or they overpaid for the property they bought. That's crazy and really interesting. And I mean, perhaps these stats depend on where geographically speaking in the country first time home buyers are. But it's pretty telling that a lot of people are looking at their house as their primary piece of investment, which does make sense from as it relates to Canadian real estate mid to long term. But the split mindset itself, confidence versus fear, is exactly where most buyers actually get stuck. If you only see the upside, then you end up in trouble. If you only see risk, then you probably don't buy anything at all. And truth is, I think you should be hopeful that real estate goes up in the near term, but realistic that it goes up in the mid to long term. As we've seen and we've witnessed in the last couple of years, you cannot bank on appreciation alone. There are other things you can look at. You can add value to a property, you can obtain and rent out properties, but you should not look at it purely from appreciation play. And I think that is where a lot of Canadians have gotten stuck. And again, that's why I think that's a dangerous game. Truth is, whenever anyone I know is buying real estate or anyone that is working with me, I always suggest that they look at it over the course of a 7-year minimum time span to be able to not only get their money back, but make additional money. Historically, if you wait 7 years, you pretty much always will earn money. And I think, or appreciate, if you will. And I think that that still holds true today, particularly in light of what's happened since 2022 in Canada. Golden rule here is plan for the worst and hope for the best. Not a big surprise, but it's something really interesting to see that dynamic. Now, and this next stat to me was interesting, and it is so true. And it's one of the reasons that I'm going to share my opinion and my thoughts on what people need to be doing differently when they consider picking a mortgage. It is that 46% of buyers said that they moved or bought a property because of life changes like marriage, divorce, new job, or growing family, or unfortunately death. Here's the thing. I mean, we know this life is unpredictable and your mortgage itself should not be unpredictable. Flexibility, truthfully, when you think about it, isn't a bonus. It is like insurance on your mortgage itself. In my opinion, is that if you're locked into a mortgage right now with no flexibility and then life hits you in some big way, whether it be because of a good thing or a unfortunate thing, then you are better off having paid a slight premium in your cost to get something more flexible than having something with no flexibility and having a substantial prepayment penalty or no ability to be able to come back from that. And when we think about what's going on right now in the marketplace, one of the common themes is people shopping for different interest rates. Truth is, you should be shopping for interest rates with the exact same type of program or product or flexibility of what you're looking for. And I think the truth is, most people are not looking at that. Like, if there is portability, how exactly does it work? Do you need to requalify? Who needs to be on title? There's different ways to do it. If there's a blending policy, how exactly does that work? And who needs to qualify? Again, I think there are so many people who just think that there is a blending policy built into their mortgage. And this could be the difference between paying $20,000 in fees versus nothing at all. And that's why it is so important to understand those parameters when you're getting into the mortgage itself. Now, this next series of data was really interesting to read, which was about the refinance boom. I'm seeing more people than ever asking about refinancing, and it's for a very different reason than it was in 2021. 2021, it was, I want to drop my payments, I want to drop my interest rate, I want to reduce my total cost, which made a lot of sense when rates were around 1.5% to 2%. But now it's for the top three reasons where number one, 28% of people were looking still for renovations, which I found interesting, which a large percentage of those looking to add in rental suites or basement suites. 22% looking to consolidate debts or higher interest debts or higher costs. And 14%, which was very, very telling, wanted to do this because of lower monthly payments. Refinancing isn't just about, of course, getting a better interest rate. It's about unlocking and using the home equity. Remember, you can borrow up to 80% of the equity in your home to improve your life situation, your financial situation, or just get you back on track. And I mean, I personally think that using a refinance to fund a home renovation is a smart idea in one of the best uses of equity if you do it the right way. That's if you know your numbers and you don't go overboard. For example, if you're going to do a $40,000 reno that's going to add $60,000 of value, great. Or add in a suite that's going to bring in $1,000 or $2,000 a month, awesome. But if you're going to do the opposite and do a $60,000 rental that's going to bring in 40,000, you probably didn't do it the right way. I think the truth is when you're looking at doing any kind of refinance, it's something that you need to pay very close attention to how you're working that strategy, if you're consolidating or refinancing, or of course, pulling equity. Now, this next segment is so key, or this data was very key for me because I'm someone who actually utilizes this from a business perspective. But 54% of buyers surveyed said that they get their primary source of information when it relates to mortgages and real estate from social media. 54% of people from social media, with YouTube being the number one destination for people looking to do research on mortgages. So if you're finding me on YouTube, give me that thumbs up. I think this is awesome because it really empowers buyers, but you have to really figure out how to separate hype from reality as it relates to your mortgage options and understanding what's real versus what's a sales tool. Now, people can jump on here on YouTube and hate on me or anybody else as much as they want, but you really need to understand the different dynamics of the decision making and what is being taught. For example, I've seen some very prominent high subscriber people out there who are recommending options that have no basis in reality and really genuinely don't help anyone. And I've also seen people on TikTok and Instagram, which again, not a bad place to be. I spend a lot of time on Instagram, meet a lot of people on there. But the truth is, I see a lot of bad information and poor recommendations and awful advice from people who have great followings. So I think you just genuinely have to do your diligence and research and make sure that when you contact the person that you're watching, you're actually asking for specific and clear advice for your situation and not generalities around it. This piece of information, again, I found really interesting. It's twice as many people from 2025 compared to 2024 opted to do something called a hybrid mortgage, which is basically hedging your bets. It's half fixed and half variable rate. Is double the amount of people, which was still only a small percent, 9% overall, but 15% of first-time home buyers, up from only 5% last year. So 3 times as many first-time home buyers opted to do a hybrid mortgage. And honestly, I think it's a secret weapon against this current market that a lot of people just simply overlook because they either don't know about them or don't understand them. They're perfect if you are worried about rates jumping, but you don't want to overpay for a fixed interest rate in case rates come back down. This offers a very high level of flexibility for some people. And I think the truth is, most people don't even know that they exist. And so they don't even know what to ask for. And the other thing is that when you're setting up a hybrid loan, there are certain options that are better or worse. And you need to be clear on exactly what those are when you're making that decision and picking that particular option. Now, this data was surprising and maybe not for some, but for me, it was still actually a pretty key thing to key in on. 14% of buyers missed a mortgage payment in the last year alone. Now, missing a mortgage payment is like a death knell for your mortgage. It can stop a lender from having the ability, or not the ability, but the desire to wanting to actually renew your mortgage. So if you're coming up in 2026 or 2025 and you missed a mortgage payment, you can expect that they probably won't renew your mortgage and you're going to have to go somewhere else and your mortgage is now less desirable. Here's the key though, you do still have options if that happened to you. There are lenders that will pick you up, but most of the conventional banks will not. Now, it's a very slippery slope for me, and it's a number that kind of scares me the most because once you miss mortgage payments, again, it's a slippery slope, and it is where financial safety nets are not just a luxury, that's got to be a lifeline. And we recognize in this current climate, there are people losing jobs and in situations they cannot control. But there are recommendations that you can have for this. Like you could get a readvanceable home equity line of credit where as you pay it down, it opens up. And if this is going to happen, it will pull from your credit line before anything else happens. There are mortgages that have skip a payment options or payment holidays, if you will. And there are emergency financing options that we can pull the parachute if needed, if you have equity in your property. Now, I've had a client who lost his job recently and missed a payment, and the readvanceable home equity line of credit let him cover 2 months of payments without any default. And now he's back up and working in a better space again. And so that was something very key to put him into a better place. Now, there was a lot more data in this study. 67% of people had concerns or felt uncertain during the home buying process that were first-time home buyers. Interestingly enough, the 91% of first-time home buyers were employed that were surveyed, which was really interesting. Only 9% that were self-employed, which also says to me that there were a lot of self-employed people out there who did not actually get into the marketplace, but because they did not know that they could, or they were being told no from the bank. This is an area of focus for my team and I for a long time because self-employed people often hit this wall that they really shouldn't because they are not taught the different ways to qualify or how to do their accounting, or that you don't necessarily need to claim all your income to qualify for a mortgage. So I think there's just a lot of misunderstandings. Anyway, this survey was massive and it covered a lot of key areas that I'll probably cover in future videos. But as it relates to looking at your financial situation right now, I think the number one theme here is to try not to stretch your budget. But if you have to stretch your budget to qualify to get into a home, build some flexibility into your plan. Truth is, first-time home buyers are going to have to do that. Any buyer is going to have to do that. And the ability to create some flexibility or have some options in your budget is going to make you a better homeowner or put you in a better financial position. So my question for you is, if you watch it to the end of this video, is what is your biggest worry right now if you are a buyer in the marketplace? Comment below your biggest worry or comment on the podcast. And if you're finding this information helpful, subscribe to get more of this content. And if you'd like to know more about how we can help you with your mortgage or qualifying for a loan that suits your needs, book a consultation on the link below. And we look forward to seeing you on the next video.